Hello, everyone, and welcome to the MakerDAO Scientific Governance and Risk Meeting number 107, taking place on Thursday, the 27th of August at 4 p.m. UTC. My name is Long for Wisdom. I'm the governance facilitator for MakerDAO currently. I'm joined by around 40 people who are interested in Maker in some form or another. So yeah, I will, I guess, briefly go through the agenda, and then we'll kind of dive in as usual. Just a quick note, if you do want to speak at any point, feel free to interrupt people, just to kind of interject. I or someone else will tell you if it becomes a problem. So yeah. All right, so agenda-wise, we've got the usual introductions. We've got a couple of announcements. We've got the usual domain updates. So we'll have updates from governance, smart contracts, oracles, risk, about MIPs. As per the MIPS cycle, the governance facilitators, i.e. me, will do the MIPS governance cycle review. So we'll talk about the monthly governance cycle for the month of August, and how that's gone and what we might see next month. As usual, we'll have Rashesh do State of the Peg. And we're also, I think, going to have a kind of open-ish discussion about the yEarn ETH Delegated Vault that has been talked about recently. Cool. All right, so I guess we'll start with those announcements. Cyrus, are you good to share your news?
Yeah, hey, can you guys hear me?
Yes.
All right, cool. All right, hey everyone. I've got some sad personal news to share. Unfortunately, my time with the Maker Foundation will be coming to an end over the next few weeks. This is a really, really sad announcement for me because I truly love this project and all the people behind it, from the community to the foundation. This was one of the first projects that really got me interested into crypto. And so I just want to say a few quick words about what's going on, what's coming next, and the transition that's being put in place. First of all, I want to give a very sincere thank you to everyone in the community who's lent me their support over the past year and a half. You guys were truly awesome. This is probably the most battle-hardened community in all of DeFi. After what Maker's been through over the past year and survived, makes me really optimistic for its future. Most of you probably don't know this, but I've actually been a Maker community member since 2016. So it's been over 4 years now that I've been following the Maker project, and I can tell you it's absolutely crazy to see how much stronger and more sophisticated and mature the community is today than it was back then. When I first decided to get involved with the foundation, it was because I thought that I had a lot of value to contribute. I just spent a few years doing fundamental research and trading for crypto, and I thought that skill set fit really well for Maker Risk. Today, though, I look around the community and I see 20 people that have the same level of knowledge and the same skills. And if you just look at the forums, you can just see how the community has really stepped up its game. And we're just constantly having community members banging down the doors trying to contribute. And it's all really awesome to see. And along those lines, there is some good news. And that is what the operational transition is going to look like for Risk, which I'm really excited about. Currently, I'm working on getting the rest of my team up and running to take over my roles and responsibilities. So Primoz and Marko, my two Slovenian teammates, if you didn't know, they've already been basically running the whole show for quite some time now. And so I have nothing but the highest confidence in them. One of my one of my dark and shameful secrets is just how much of their credit I've been stealing. So thank you, and sorry about that, Primoz. But they've been doing all the collateral evaluations, all the monetary policy, and they do an amazing job keeping track of everything that's going on in the broader DeFi ecosystem, which is of course very important. These guys really understand maker risk, maybe even better than I do at this point. So I hope everyone in the community will get to know them a little bit more closely. Just been awesome coworkers. And I'm a little bit excited to see them become a little bit more public facing as well. So please make sure to give them a warm welcome. And also, of course, want to give a huge, huge shout out to Vishesh, who's just been absolutely critical, instrumental, life-saving to this whole operation over the past couple of years. And I'm sure he will continue contributing his data analytics and modeling work. Best thing I ever did at Maker was getting these three guys involved. As for myself, as I mentioned, I've been deep in the weeds of Maker for 4 years now. And it's just reached a point for me where I need to just try something new, just something a little bit fresh. You know, after 4 years, it's not like I can just walk away, and I'm pretty sure I'll be sticking around for quite some time. I feel like I still have a lot to give MakerDAO. I'm excited to go back to being a community member and just kind of making community contributions. As to what's coming next, I've accepted a role as head of risk. Just joking. No, I just need some time to unwind and figure out what's next. That's it. All right, thanks everybody.
All right, thank you for that, Cyrus. Yeah, if anybody wants to say anything and make Cyrus feel uncomfortable, now is a great time to do so.
Yeah, of course. Last thing. So yeah, if anybody has any questions, like this will be in, as I said, I'll be around for a few more weeks. This will be an ongoing thing. There will be plenty of time for questions on everything at any time. Yep.
I think I'll go ahead and say a few words. I mean, you know, Cyrus, look, it's been an absolute pleasure working with you. You know, as someone who is constantly burning the midnight oil, you know, I see you. You know, I don't think you were ever getting any sleep. You were just 100% focused on Maker all the time, and I don't know if that's like inspirational or like depressing, but it was good to have a fellow spirit. And you know, you know, a big part of, you know, why we've been able to come as far as we have in terms of governance, right, in terms of risk, in terms of, right, even the collateral onboarding process, right, has been because of you. And so, you know, I really just wanted to extend a really big thank you, you know, not just from me, but from the entire community. It's really great work that you've done, and, you know, we're all the better for it.
Here, here.
Thanks, Nick.
Completely.
Appreciate it.
Yeah, it has been awesome working with you, Cyrus, as well. It's been great.
Yeah, I think you've done a great job, dude.
Thank you all. Appreciate it. Appreciate the kind words.
Okay. All right, not to pile
Yeah,
on.
let's
But,
let's carry on with the most depressing governance call.
Yeah,
You know?
but Mariano, do you want to talk about your announcement?
Yes, I'm leaving too. Bye, everybody. Nah, of course, that's not going to be all. Yeah, I don't know how to follow Cyrus after his announcement. The governance and risk meetings are mostly his thing. He's been like the main star here, you know, along with Long for Wisdom and Rich, who you know, already left a few weeks ago. So I agree, this is probably going to be the most depressing GNR call. To say a few things, I joined Maker project as well 4 years ago, it's been, my crypto life has been tied to Maker from the start, you know, helping build a single collateral DAI, getting paid in those first proto-SI tokens, you know, up to the launch of single collateral DAI, then working on MCD, deploying MCD from this very room, from this very computer, you know, it is a huge honor, and I'm so happy to have been a part of that. And you know, I'm stepping from my role inside the Maker Foundation, but like Cyrus said, I'm still gonna be very much involved with the protocol. I remain an MKR holder. You know, a voter, community member. I want the best for the protocol, and yeah, that's pretty much it. You will still see me around. I'm gonna try to take it easy for a couple of weeks, and you know, try not to be on Twitter all that much and sleep a little bit more. I don't know if I'm gonna accomplish that. There are no immediate plans. I'm not going to another protocol. I just want to relax a little bit after 4 years. The smart contracts team, they're amazing. You probably already know all of them. The fort is well secured in that regard. So yeah, I want to thank everybody, and you will probably see me in maybe not the next governance call, but starting from a couple of weeks, I will be joining again. And I think that there's a few things that I can bring to the project from an outside perspective as a community member that maybe I cannot inside the foundation. So I'm really looking forward to that. So thank you, everybody.
Thank you very much, Mariano. Yeah, I know you've always been like a super positive kind of face and influence, I guess, over the protocol in the space. So thank you for that, and I'm sure it will continue. If anybody else wants to make Mariano feel awkward, go ahead.
Somebody say something.
I mean, if no one says anything, I will. I just didn't want to, you know, be the guy giving the eulogy like both times. I mean, look, I don't know if you guys realize this, but without Mariano, there would never have been like a maker, right? If anyone remember Sai? Do you remember that first amazing dashboard we had? It was so beautiful, right? It had like, you know, some RGB colors and was just a bunch of tables with 24 buttons, and you had to press them all in the right order. Well, you know, you can thank Mariano for that. You know, it was a supreme example of back-end engineers trying to hobble together a front end, you know, just for testing. And then at some point, you know, instead of just for testing, it was like, oh, we're launching, right? And you know, it takes a certain kind of person, you know, to be able to just like be okay with that. But no, I mean, on a personal level, Mariano, like, you know, you've been my mentor, like the entire time I've been at Maker. You know, you've relented to endless badgering of questions from me, which I so appreciate because I'm so much better for it. And you know, you were the one that got me into oracles. You know, Mariano is the original oracle guy. If you guys didn't know that, you know, for creating his own baby and then, you know, being comfortable enough to hand it off to me, you know, not everyone can do that, and I appreciate him so much for that. And so with that, you know, I'm gonna miss you, buddy, but I know I'm gonna see you soon. I'm gonna visit you in December in Argentina. So looking forward to seeing you in Sole again.
You got it. I love you, man.
Love you too, dude.
Cool. All right, thank you for that, Nick. All right, with the depressing parts out of the way, let's get to the actual content of the call. So yeah, I think I'll start with actually we'll do domain updates actually first, and I'll do governance at a glance. So yeah, I guess smart contracts. Do you want to do an update?
Sure. Yeah, just I guess a handful of bullet points. Liquidations 1.2 is slotted to go. The spell is slotted to be deployed tomorrow, and then next week we have. It's going to have an office hours modifier, so we won't be able to cast until Monday, between Monday and Friday. And then we have the spell for PAX USD and Tether for September 4th. The same deal, but there's an office hours modifier on that, which will be created to not cast on Labor Day, so Tuesday, between Tuesday and Friday. And the third bullet point would be the Dark Spell, which I demoed last governance and risk call. Still open for comments until September 9th. And yeah, that's all. I don't think if anyone has anything else to add, I think those are the big bullet points for the week. Everyone's pretty much focused on liquidations 1.2 at the moment. And that's it.
All right, great, thank you all. Oracles, Nick, you got anything?
Yeah, so right in the past week, we had an application to get whitelisted by yEarn on the ETH-USD OSM for their delegated vaults. I had initiated a kind of fast track signal request on the forum, so we could get that into this week's kind of polling cycle. And it looks like the polling vote is passing or passed, so that'll be included in this Friday's executive vote. And I just wanted to touch on real quick, the reason why we, the reason why I at least initiated this this signal request to fast track it is because, I think we've gotten a bit too comfortable with the peg being kind of above $1, and it's not even about the magnitude anymore. It's just the fact that it's still above $1 and we haven't been able to push it down. And so to me, anything that has the potential to generate very large amounts of DAI, I think is worth fast tracking. I think it's imperative that we get this under control. And the potential that I see with the delegated ETH vaults is huge. I mean, right now, right on yEarn, you can lock up your YCRV, right, which is just a basket of stable coins, right, and you're earning somewhere close to 100% APY, which in crypto terms, maybe some people yawn at, but in traditional finance, I mean, that's an amazing return, right? And so you have a lot of people right now, who have very big ETH bags, right, and they're borrowing against their ETH using, say, like a vault, and then using that DAI to yield farm, right? But it's kind of risky because they constantly have to monitor their position, right? So they're either, collateralized very, very highly, so they can get some sleep, or, they're losing a lot of sleep by being on the edge, like Mr. Mariano here, who posted a Twitter picture the other day of being like 152% collateralized. And so, because this is risky, right, there's probably a lot of people on the sideline who don't want to take on that risk. So having this kind of vault where you can just lock up your ETH and it's automatically, taking out a bunch of DAI and making sure programmatically that that vault is not getting liquidated, I think that's going to be huge. Like if this doesn't generate, 40, 50 million DAI within a month or two, like I would be disappointed. And so I just wanted to give some color on why I thought this proposal was so urgent, because I didn't want it to seem like there was any kind of favoritism with yEarn or anything like that. I'm purely looking at it from a DAI supply type of perspective. Okay, and that's it for me.
All right, great, thanks, Nick. Yeah, as I kind of said earlier, we'll kind of get a chance to discuss yEarn vaults later, hopefully. But yeah, awesome. So Risk, any updates?
Yes. So we spent the last week working a lot on liquidations 1.2 parameters, kind of working on analysis there. We also did in kind of a research analysis piece on C tokens as potential collateral types. So can be kind of just final revisions there, and then we'll be posting that to the forums as well. Kind of some interesting ideas around C tokens. We've been working on on the ETH A and ETH B risk premium calculations. Those are done, but also just final revisions, so a few more days for that, unfortunately, but very soon. Same with Chainlink. Chainlink evaluation is also completed. Just kind of need to do some final sign-offs. Hoping all of these can come next week. And that's it for the primary updates. Yep, and that's about it.
Okay, thanks. All right, cool. I will run through, I guess, governance at a glance, and then we'll go on to MIPs. Cool. So yeah, this kind of last week have been a few interesting discussions crop up. We've seen, we saw a couple of things actually. So, John, actually no, John Tathman highlights the usage of snapshots and other protocols for gas-free voting. I don't know if any of you've seen this thread, but essentially snapshot appears to be I mean, some of you may have used it, to be fair, is a method to vote using tokens off-chain just by signing transactions, which means you can kind of avoid the whole gas cost that is kind of causing us trouble at the moment. So that was pretty interesting. If you kind of interested in that, I would check out the thread, kind of have a look at the snapshot. I think it's being used for balancer and I think yEarn at the moment. No, not in yEarn. Is it balancer and whatever, balancer and something. Cool. So one of the other ones was so Graham Barnes from Omen posted a post about using prediction markets to help with benefit MakerDAO governance, which personally I thought was pretty interesting, and I'd like to drive more attention to. Prediction markets kind of have a lot of potential in terms of governance, much of which hasn't been explored yet. So if anyone has any thoughts or opinions on that, I'd encourage them to share them in that thread. Let's see. And then finally, we had a good, so we had Aaron Barch produce a feature analysis of crypto governance systems, which is like a really comprehensive kind of description of the various governance systems being used by the various protocols that exist right now. Kind of talking about the pros and cons of each one and trying to map kind of the improvements that they integrate and how to map those back to Maker, which again I thought was super helpful. So thank you for that. In terms of consensus seeking and signal requests, so we have the increasing the WBTC debt ceiling moving on chain next week on Monday from Aaron. So thank you for that. And then we had the increase to the BAT risk premium, which finished just before this meeting. I haven't actually checked the result of. Does anybody know what the result of that was? Before I check. Anyone? Oh wait, was it the back risk premium? Or was it WBTC risk premium? Yes, it was WBTC risk premium. So that's my fault. I got confused. So that was to move the WBTC risk premium from 2% to 4%, which I think passed with 34K Maker. So fairly comprehensive. Yeah, other than that, I haven't really been many more signal requests. And there's the kind of one that Nick mentioned to do with the yEarn oracles, but that's kind of finished, so not much really to do with that for the time being. All right, I think that's the kind of highlights of the forum and governance for the last week. Charles, do you want to do your MIPS update?
Yep. Could I get the screen sharing rights?
There you are.
Thank you. Okay. So this week's activity for the week of August 24th to 28th, on Monday we saw the monthly MIPS executive go live, and it was for 2 sub-proposals that were also included in that monthly governance poll for offboarding of core personnel of Richard Brown as a governance facilitator, and the second was a declaration of intent sub-proposal for forward guidance posted by Akiva. So the executive currently needs 66,298.49 MKR to pass before the 4-day period ends, and it actually ends tomorrow at 1:30 p.m. EST, so approximately 25 hours until the time limit ends. So I encourage anyone to vote and make your voice heard, because these are quite important proposals. I mean, you guys might not want to offboard Rich Brown officially, but it is needed as a formality. So if you haven't voted, please go ahead and do that. Today, Long is going to do the monthly governance cycle review, summarizing what's happened this month. Not too crazy of a month in terms of the proposals that have come through, but we've seen a lot of new submissions for next month and the month after that. So we'll also have an open time to talk about any improvements we can make to the entire process, or also discuss any upcoming proposals for September's governance cycle. So next week's activity, there's no slide for that because it is a gap week between governance cycles. So the week of August 31st to September 4th is this gap week where we can kind of get recalibrated. People who are working on proposals can submit them in preparation for a future governance cycle, and more discussion can happen on the forums with respect to all the current proposals in RFC or another status. Collateral onboarding updates are the PAX USD and USDT governance polls passed today, which means the executive vote to officially onboard them will go live on Friday, September 4th. The signal request that was gauging sentiment around the loop ring resubmission ended, and the conclusion was that LRC will be resubmitted for September's governance cycle. Additionally, I believe Cyrus mentioned the next month's planned collateral types are Comp, Link, and PAX Gold. And lastly, the collateral onboarding community greenlight polls for this month's governance cycle end on Monday, August 31st. So don't forget to vote if you do support one of those collateral types and you want to see it get pushed forward. In terms of the proposals that are in the request for comments phase, there's quite a lot. The first one is the MIP20, the target price adjustment module, aka VOX. And this proposal's feedback period ends at the end of September, so making it eligible for inclusion in the October's governance cycle. MIP15, the dark spell mechanism, as Will mentioned earlier, it will be going into September's governance cycle. An update with MIP14, the protocol die transfer, is that it is going to be championed by John Daithman, sorry if I mispronounced your name, but Long for Wisdom has added him as a co-author, and I'll facilitate that. So really excited to see that get pushed forward again. The MIP17 rewrite for the actual debt ceiling adjustments is still a work in progress. It is possible to be resubmitted for next governance cycle, but it just depends on how myself and the working group are pushing it forward. It has been a little bit of slow progress. The last two, most recently, are two sub-proposals for declarations of intent. The first one, created by Sam M, is the DAI Flashmint module, and that RFC ends this governance cycle, so it will be eligible for inclusion in September's governance cycle. And the most recent was a declaration of intent for strategic reserve funds, and that RFC will happen over the course of September's governance cycle, making it eligible to be included in October's governance cycle. That's an error right there, so that should be October. Lastly, the premium discussions. So there's no new ones this month or as of recent. Over the past couple of weeks, there was a new one proposed by Lucas from Centrifuge, and it is a vault liquidation mechanism for trade finance assets. And I believe there are still active conversations going on with respect to the governance chief executive contract redesign. Of course, the liquidations 1.2 and 2.0 conversations have been pretty active. And lastly, a conversation has still had a couple threads being active for adding a poll to prioritize the collateral applications with respect to community greenlight polls. That's the end of the update today. If you have any questions, feel free to ask them now, or if anyone wants to speak about their proposals in RFC, you have a couple minutes to do so now. All right, silence.
Yep, doesn't sound like there's any takers.
I guess it's time for the governance cycle review then.
Yeah, sounds good. Okay. Cool. So the governance cycle review is just a kind of discussion of how the last governance cycle went, and potentially about what's going to happen in the next one. So I kind of start off like, if anybody has any thoughts over the last governance cycle, feel free to share now or while I'm talking. I kind of have the usual set of like stats, which is kind of a little bit boring, but you know. So yeah, I mean, we had three proposals submitted this month, which were the declaration of intent for forward guidance, the domain work requirements for onboarding LRC, and the sub-proposal for core personal offboarding Rich. Three of those were accepted. All three of those were accepted into the cycle, but only two passed the inclusion polls, which was the declaration of intent for forward guidance and the sub-proposal to remove Rich. So we lost LRC at that stage, which was a little bit of a surprise for some. Like I know many of the people I spoke to kind of expected it to be included. And I think that might be the first time we've seen something that hasn't been included, or at least it's definitely the first time we've seen something like a collateral onboarding proposal like not be included. So yeah, that's potentially worthy of note. I think as kind of Charles said, I think the plan is to resubmit it next cycle. So we'll kind of, I guess, get a better idea of whether that was whether it not being included was a result of just lack of participation, or was, you know, an actual objection to the collateral type itself. Yeah, so a couple of people saying there was similar gas prices around that time, which is true, and I think it was like kind of one whale who voted against and pretty much carried the poll. Both of those are true. So yeah, hopefully it will encourage more people to participate if they want to see onboarded. Cool. So as Josh mentioned, they're both still the executive with these two changes in the declaration of intent for forward guidance and the sub-proposal to remove Rich officially. Are both still up for executive, and that executive has, I think, until around this time Friday to pass before it expires. So there's still a chance that it will pass, which is good. So in terms of like participation in the actual various sections, kind of similar to what we've seen previously for the inclusion polls. So like kind of 17K maker participating again, which was that whale I mentioned. And in the governance poll bundle, we saw like 3.5K-ish maker participate, which is So I think last month we had 18K, but the 2 months prior to that we had like 5K and 4K. So potentially a return to average based on the high gas prices. So kind of in conclusion, we're kind of seeing what we've seen for the last few months, which is that some kind of holders, you know, some amount of Maker is kind of participating in the governance cycle, and obviously a larger portion is not. And I don't think that's necessarily a bad thing, because a lot of these sections, like the kind of point of the monthly governance cycle is that if you're only paying attention at the end, you can still like kind of vote and have an impact, right? And you can kind of use the previous votes to kind of inform your decision at that point. So obviously it would be great to have more participation, but I don't think we're kind of at in trouble levels yet. I think we'll kind of we'll hopefully see more participation next cycle, because I think there's a fair few things that are going to be submitted. I think it'll be a bigger, like a more full cycle. So hopefully they'll attract more attention. Yeah, so I think I'll leave it there because I don't want to use it too much time. But yeah, if anyone has any comments on the governance cycle or how things are going or the kind of structures that we're following, feel free to chime in. Okay, doesn't sound like there's any urgent questions. As always, the forum's there for discussion if anyone thinks of anything later they want to discuss. Cool. All right, so I think we'll have state of the peg and then we'll move on to kind of open discussion. Vishesh, are you set and ready?
Yeah. All right.
Co-host.
Share my screen. Okay. All right, so broad strokes. In terms of DAO trades, so what we've seen basically in the last few days is that the price has been fairly volatile and trended slightly upwards in the $1 range, and then kind of pushing up into $2 here and there. There's been a fair bit of spread on those trades lately. Part of that will likely be contributed to the fact that there's a little bit of volatility in the ETH price, as there hasn't been an insane amount of movement in terms of farming opportunities and the yield that's available there. But we'll circle back to that. In terms of the DAI USDC pair, so that same sort of trend is a bit clearer. So you can see this is dominated by curve trading volumes. So here you see where, you know, about 2 weeks ago, the DAI peg had dropped back down a bit due to the end of a few farming yield opportunities, and that had kind of stayed flat, though has risen back up a bit just in the last day or two. And this may be in part contributed to market volatility and not just farming behavior. And then if we see on DAI USD, again, a bit more of that spread, but there's a lot more variability of the sizes of trades on the DAI USD pair. So this particular chart is always a bit messier. But you can see more clearly sometimes in this pair those moments of run up and liquidity crunch. For DAI USDT, it's just very similar to the DAI USDC graph. In terms of where that puts us for overall supply, so overall supply is sitting around 440 million. 210 or so of that is in the DSR, primarily through Compound, and then 230 million of that spread throughout other addresses holders and contracts, so we'll kind of dive into that. But in terms of the collateral, where this ETH is coming from, or where this DAI is coming from, so we look at the largest grouping, of course, is ETH. So we see here basically the continuing trend that the DAI supply minted from ETH has continued to grow, obviously at an increased pace since July, but that pace appears to be slowing down a bit. So it will be interesting to watch whether there continues to be a significant amount of DAI that's minted from ETH. My expectation is that you'll see that curve sort of accelerate during times of extremely frothy yield, and you'll see it sort of slow down or resume pace of growth in sort of a steady state environment, especially if ETH price continues to appreciate. So it will be interesting, if there's a drying up of yields, or if ETH price drops a bit, what this does to the amount of DAI that's minted from ETH. But for now, it appears to be sort of continuing that pace of growth. USDC, however, is it's a much more instanced, I think, vault, where there are a few large individual users that tend to dominate the supply, and so when there's individual mintings or individual repayments, it tends to impact the percentage of USDC DAI utilization more significantly. So in result, kind of a jankier graph, but this has not been as heavily used in the last couple of weeks, and there have been a few small movements here and there, but it's more or less sitting still in that like 10 to 12 million DAI range. WBTC has kind of continued to cap out as the goalposts get moved, but with the most recent increase, it took sort of a few days to reach around 80 million, but that's roughly where we're sitting for the WBTC DAI. So it appears that there's a fair amount of demand for utilization, but again, similar to USDC, it's primarily dominated by a few large users. So again, that'll be a discussion point for the community in terms of how each different collateral type is being used. What we noted in the last few days was, again, a few large movements, but BAT sort of jumped back up to about 5 million DAI minted. So partially you would expect that this is due to sort of decreased capability of using and generating yield from that capital on other platforms, and so presumably somebody that's still long BAT wants to be able to get more leverage out of that capital, and Maker is the place to do it for them. So that's kind of as expected for this particular collateral pool, though it's not a significantly large share right now. So in terms of what the underlying collateral looks like, so what we saw with ETH actually is there's been a sort of a hopscotching back and forth in terms of the collateralization, but what we've seen as the ETH price appreciates is that, if we follow around here, as the ETH price was appreciating, we saw sort of an increase in the collateralization, and then as it decreased a little bit, again, these are very small fluctuations, but as it decreased a little bit, we saw actually the collateralization ratios hold kind of constant. And then just in the last couple of days, with the ETH price coming down a little bit more, we actually saw a little bit of a re-increase in collateralization for some of these larger vaults. So they're still sitting in what's kind of a medium risk scenario, around 200 to 250% collateralization, so that's definitely something to keep an eye on. Though, you know, there are quote unquote signs of life in that people do appear to be managing their collateralization somewhat. But I think you see more of a movement in the collateralization ratios with the ETH price moving than when it's more or less constant. So what that means is, you know, people are not necessarily managing their collateralization as much as letting it stay somewhat constant and then fluctuating with the ETH price. But yeah, some of these largest vaults are around 200, 250%, 300%, to a bunch of 200% roughly collateralized vaults. So, you know, what you would see is if the ETH price were to hit 280, you would see a huge chunk of DAI liquidated. And that's something that, you know, in terms of liquidation structures, in terms of risk parameters, etc., community needs to be aware of that. You know, what would happen in the event that there was a large tranche liquidation like that? And, you know, in terms of liquidation 1.2 structures, etc., that conversation is ongoing. So just something to be aware of. USDC tends to be rather boring to talk about in terms of collateralization. It's roughly where you would expect, close to the line. But WBTC, it's just interesting to note that some of the larger vaults do maintain a bit more collateral, though, you know, there's at least 3 large WBTC vaults that are sitting around 160% collateralization. So these are just, it's obviously going to be a bit different from ETH, but just numbers to be aware of in terms of where that particular collateral pool sits, since we don't talk about that one very often. So, you know, we talked a bit about the DAI supply, just to look at, you know, roughly where a lot of that sits. So obviously, you know, there's 210 or so million excess DAI on the compound, and that ultimately finds its way back in the DSR. So that accounts for roughly half of the DAI that's been minted. But in terms of the remainder, so just at a glance, what you sort of see is a decent chunk of that remaining supply is sitting in Curve, Balancer, Aave, the Zombie Finance Pool. So different, basically, opportunities for users to obtain yield. Obviously, you know, there was much larger stake in some of the previous yield farming opportunities that had cropped up, and that had kind of flown out as expected as some of those yields died down. So, you know, the remaining 230 million DAI supply is definitely a moving target, and there's a fair amount of volume flow. So, you know, you see still 25 million or so of that in Curve, which is a very decent chunk. But you also look at like the volume, right? So if you compare USDC has a significantly larger balance share in Curve, but the amount of trading volume per coin on those platforms is, you know, roughly comparable for DAI and USDC. So we just see that DAI is moving around quite a bit, even though it may hold smaller shares than some other tokens in these platforms. And yeah, I mean, this is the same sort of data there in terms of Curve, Balancer, Aave, Zombie, accounting for altogether a decently large chunk of the remaining DAI supply. And yeah, I mean, so you see Balancer, there's about, you know, 20 million in that particular DAI pool. I think that's it in terms of things that they're going into at the moment, but I'm happy to double click on anything in particular. I know that was a fair amount.
So I have a question. Earlier you showed like a chart, right, that was showing that as the ETH price goes up, right, collateralization increases, and as ETH price goes down, it decreases. That all makes intuitive sense. But is the magnitude of those changes, especially when ETH is going when ETH is going down, is the magnitude just kind of proportional to the price change in ETH, or are we actually seeing people lever up when the price is going down, right, and thereby lowering their collateralization?
Yeah. So it's a good question.
Are they FOMOing into the drops, or is it just like just price movement?
So I don't even know if that's necessarily the right phrasing, but definitely, you know, it's basic math that as the ETH price goes up, collateralization goes up. What we've seen historically with DAI is that after that collateralization has gone up, people tend to do to differing degrees at different times, but some sort of re-leveraging where they end up lowering their collateralization ratio in response, either by minting more DAI or by removing a little bit of that unnecessary collateral. In the recent environment, I think it tends to be more of minting more DAI. And then when the ETH price comes down a bit, I think we tend to see sort of a compensatory behavior where people recollateralize sort of in an anticipatory kind of way to protect against liquidation. In the past, that tended to be adding more collateral back. I think lately, you know, either there's a decent amount of utilization of people's capital and that, you know, it's kind of deployed in a lot of different places, or, you know, some other potential explanation. But I think people tend to more manage their DAI balance than their collateral balance as of late.
Cool. Thanks.
Any other questions for Vishesh, or should we move on to discussing the yEarn ETH Delegated Vaults? All right, sounds like no. Cyrus, do you want to kind of introduce this?
Sure, happy to. I think Nick did a decent job earlier, and I'm kind of caught off guard. But the basic idea is that there is this DeFi protocol called yEarn. One of their upcoming products will be ingesting ETH, and this strategy, or Y Vault, as they call it. And Y Vaults are not to be confused with Maker Vaults. Very different concept, similar names. This Y Vault, which takes an ETH, which is sometimes called yETH, will be opening up a Maker Vault and minting DAI at a 200% collateralization ratio, I believe. They will take that DAI and they will deposit it into the Curve Y pool, which in return they would get a LP token on that Y pool, which is called yCRV. Essentially, yCRV acts like a stable coin, but in actuality, it's kind of like a claim or a liquidity provider token for this Y pool. And then it will yield farm with that yCRV token, or that Y curve token. That's, I think, the summary from the high level, although I think there's definitely a lot of confusing terms in there. One of the cool things about this strategy is that they want to be able to read from the OSM so that they can de-lever their vault if the ETH price starts to fall. This, I guess, makes, I mean, of course, makes it safer for them. And I believe they've requested whitelist access. That's kind of what Nick was referring to earlier. I think things that this community needs to consider are, first is kind of any blowback risks, anything that might be contagious from yEarn into Maker. So I think from the perspective of reading off the oracles, I think that's fairly harmless. I'll let Nick comment on that. On the risk side, though, the benefit is that an enormous amount of DAI could be created depending on the popularity of this product. DAI deposited into the curve Y pool has a direct downward pressure on the DAI price, which is obviously something we're all interested in. Over the past couple of weeks, we saw the DAI price get pretty close to $1, which was a direct result of the CRV farming from the Y pool. So I think that's kind of the main positive point. The main negative point kind of might be, you know, in theory, we've as a community, we've never really come to a consensus on how we feel about users taking advantage of the OSM and the 1 hour delay. I mean, of course, it's totally possible and plenty of individuals do it, but this could be more from like an institutional level scale, could be hundreds of millions. And we'd have to kind of explore what the consequences there are. So basically, on average, the collateralization ratio for Maker as a protocol would be lower because people can kind of take advantage of the OSM. But then, of course, I already mentioned the upside. So that's something that the community should probably discuss from a risk angle. Right, and then so if there's a huge sudden ETH drop, it's unlikely that, well, actually, I'm not sure how the strategy would deal with that, but it may not be to MakerDAO's favor. I think that's pretty much the key points for now. Am I missing anything? I know there's a few people from the yEarn community on this chat who may be able to chime in. Akash, let's jump into them.
Yeah, sorry. So I'm trying to understand. So it's great that on the first side that it's adding a bunch of DAI to the Y curve pool that should decrease the DAI price. That's a great thing, right? What I'm a little worried about is on when ETH drops and then they come to buy DAI to close out their position, aren't they going to be putting a bunch of upward pressure on DAI when they're trying to close their position?
Well, they wouldn't be buying it. They would just be removing it from the Y pool, which sure skews the pricing on Curve, but it's not nearly the same as going into Coinbase or Oasis and lifting the offer.
The DAI isn't guaranteed to be there on the curve pool, right?
No, it's not.
That's part of the issue, I think, for me anyway. Well, not the issue, but like something I was
So
thinking
yeah,
about.
I mean, so I think the potential solution is if they were, if the USDC vault was available and they had the option of like if the DAI is there, then removing the DAI and obviously closing out their ETH vault. But if the DAI is not there, then somehow being smart enough to use the USDC vault to mint DAI to kind of help temporarily close out their ETH vault. I don't.
Yeah, I think there's a number of ways these strategies could be improved. I think this is just like a first pass, right? This is like, I think this is the most complicated strategy to date. They're attempting, given that there's now leverage built into it. Doing something like USDC could, in theory, be something entirely different. Could be something like unrelated to this. You know, it's kind of, that would be more along the lines of those Keeper DAO strategies where you have a bunch of people deposit USDC or DAI or whatever into a smart contract, and its job is to bid on auctions or stuff like that. So I think that's like definitely like a very smart way of doing things, but also maybe somewhat distinct from this strategy directly.
Right. I guess my other concern is just, you know, is it audited? But I mean, I guess that's a concern for the initial yEarn ETH person, right?
Exactly. That's why I was asking, like, that's why I was saying, like, we need to think about potential blowback. So that's one right there, right? If they put, you know, the community's discussed it over the years, but if there's 100 million DAI sitting in some exchange or some smart contract or whatever, and then it gets hacked, what effect does that have on MakerDAO? It's not, I don't think it's ever really been this community's mandate to oversee what other users do with DAI. And I think it's a bit unclear on what impact it would have anyways.
Yeah, again, so this is my personal opinion. I mean, it sounds like something that could help the DAI pack. So generally I'm in favor of it. Obviously there are risks for the individual user who goes to yEarn, but yeah.
I think maybe a good way of thinking about it is maybe they can be, they're considered like a super user, right? Because potentially they could dwarf any other single individual vault, even the largest ones we've ever seen. So it could be interesting. I can't say that, I don't think we'll be able to consider all of the edge cases at this stage. But for now, I think the proposal just focuses around the Oracle whitelist. And so I think maybe that could be the primary concern for now. I'm not sure.
Yeah, I mean, it's worth mentioning this isn't something we can like stop happening, right? Like this, it's the usage of DAI and Maker vaults. It's just something we need to be aware of that's happening, right?
Yeah. So
and even without, sorry, Nick, and then even without the Oracle whitelist, this strategy can still work. It just wouldn't be as effective on their part. So I think it's a question of like, on the Oracle side, does MakerDAO want to help transition this in? Is that accurate?
yeah, that's what I was gonna say. Like, look, they're still gonna do this. So right, they can still, you know, look at what the Oracle price is, right? They just do it in a less trustless way. So if we at least want to make this decentralized, right, then they need access to the OSINT. But this thing is happening either way. So it's best to at least do it in a controlled manner, right? We don't want to risk surprise liquidations. So I think it's in our best interest to do this the legit way.
So I feel like it may be good to focus the conversation, I guess, on the not impacts, but like I guess the governance considerations that this is going to bring up, right? Like, if this proves to be really popular, then we potentially want to upgrade up the debt ceiling fairly rapidly, right? You know, just other like considerations that we need to be aware of as a result of this coming into existence.
Yeah, I think the popularity of the so like kind of taking a step back from Maker and just thinking from kind of a broader yield farming DeFi perspective, this is how I've been viewing things. The YCRV yEarn strategy, which is called YYCRV, has been very popular. I think upwards of 100 million in there. A lot of that comes from borrowed stable coins, either from Maker or Compound. And so ultimately the ultimate source of collateral is ETH for certainly a good percentage of this. For anybody who's tried the strategy, you know that there's a considerable amount of maintenance and anxiety and headache trying to manage your liquidation risk and liquidity risk, actually, for the strategy. If that can all be automated away, and the yEarn strategy can even manage the liquidation risk by reading off the OSM, then I think this is going to be enormously popular because as I said, like even with all the current difficulties, it's already ingested upwards of 100 million. So this could go a lot higher, and that would, I wouldn't be surprised if this easily tacks on a couple 100 million DAI over the next couple months after the strategy is live, assuming the contract is battle hardened and audited and all that, all people start to understand exactly how the liquidation management works. So then the downside is obviously I don't know about downside, but we are going to, again, have to wrestle with a very quickly ballooning DAI supply off of the ETH collateral, which I think over the years I've started to realize it's just going to be maybe one of those like endlessly, no lack of consensus debates. Some people love ETH as collateral and think it's super safe. Others feel strongly the opposite way. Obviously, big consideration for the circuit breaker and liquidations 1.2 and liquidations 2.0 has been to allow MakerDAO to more efficiently process large collateral liquidations, especially with ETH. So yeah, I don't know. I think it's just going to be one of those ongoing conversations.
Yeah, I mean, I definitely think this is going to increase our kind of the proportion of the DAI portfolio that's backed by ETH. I mean, there's no question about that. But it's the trade-off here is either, right, do you want peg stability, right, which is only going to be achieved by minting a bunch of DAI, right, which this enables us to do. But you're right, the trade-off is, right, that we're more reliant on ETH, and we, even with the liquidation changes that we're adding, right, we definitely increase long tail risk for a Black Thursday type of scenario, right, because we're now even more exposed to ETH, right? I mean, if you look at USDC, it was at one point, a very significant chunk of the collateral portfolio, and that's since fallen by the wayside. But I mean, if you ask me, I think it's worth it. But there's definitely serious risks to consider about the externalities. And this is all assuming that this yEarn, yETH, delegated vault thing is super successful, right? And if it's not, then it's not a big risk. But to be honest, I don't see the latter scenario really happening.
Okay, does anybody have any final points, or it's almost 15:15, so we can think about wrapping this up? All right, not hearing anything. So yeah, I guess we'll stop there for today. Thank you everyone for coming, and I will see you all next week, I expect.